What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So it's been a couple of months since I last covered Neo. In that time, we did manage to put in a new all-time low on May 12th of $11.67 during intraday trading, though Neo did close higher on that day near $13. A friend of mine asked me earlier this week if Neo was still a good investment given how low it has fallen. And that really is the reason for today's video. It is a fair question given all the uncertainty from the geopolitical tension and delisting narratives that have dominated most of the mainstream media here in the US. So let's start with a short and sweet answer. Neo is still a great investment for those with a long-term view. They are nowhere near close to being at risk of being delisted, and now is a great time to continue accumulating. You could probably end the video here and go enjoy your day. It's really that straightforward. Now, if you're interested in what allows me to have continued confidence in Neo, stick around for the next 10 or so minutes. Also, as I was recording, some late breaking news suggesting that Neo may be coming to the US sooner rather than later dropped, so I'll touch on that as well. As always, this isn't to be taken as financial advice, as I'm not a financial advisor. This is my personal approach to investing and the thought process behind it. I recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop the video an early like if you haven't already, and hit that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. All right, so let's start with what Neo has been up to since the last time I covered them. There's quite a bit actually, so I'll just focus on the most relevant items in my opinion. Number one, after completing its secondary listing on the Hong Kong stock market in March, which by itself is a big deal, Neo is now officially listed in Singapore. The key here is that the share listed on all three exchanges, so the US, Hong Kong, and now Singapore, are fully fungible, meaning that investors in all three locations are buying and selling from the same pool of shares. This makes this move non-dilutive to investors while providing more flexibility for around-the-clock trading. That's pretty cool. Secondly, we know that Neo will be holding its earnings call on June 9th. We also know that delivery growth on a year-over-year basis improved significantly. The green bar represents Q1 2022. A lot of focus here will be placed on the European expansion, and we got a bit of a preview with the recent news that Neo will officially open its second Norway Neo house in Q3, with plans for 2 more in Q4 this year. Also, more battery swap stations are coming, with 2 more by the end of Q2 and a total of 20 stations by year end. Continuing along, Neo crossed a couple of key milestones, the first one being the opening of their first service center along with the delivery of its 500th vehicle in Norway, so things seem to be progressing nicely there. And second, Neo celebrated delivering its 200th production vehicle in China since its inception. Of course, it was an ET7, and you can see that they made it quite the event. Despite all the supply chain challenges and the phased lockdown that began on March 28th due to the zero tolerance policy that China has, it does appear that Neo is decently managing through it all. Looking a bit ahead here, I expect Neo will be challenged in Q2. April deliveries were down to 5,074 as the lockdown effects start being felt, and May is likely to be about half of that based on a 200K total number of deliveries, just doing some quick math here. The good news is that those restrictions that we've been talking about are gradually being lifted, and June should see a nice surge for catching up. We'll see what Neo guides to during the upcoming Q1 earnings call here on June 9th. I think that will be a big part of what sets the tone for the stock moving forward. For the sake of time, I won't be rehashing all the reasons why the listing really is no longer a concern at this point. I covered that extensively in previous videos, and more recently, posted this article on Twitter if you missed it. What is notable, however, is that analysts are now starting to catch up. Bank of America analyst Ming-Sun Lee upgraded his rating on Neo from neutral, which is the same as hold, to buy, and raised its price target from $25 to $26. In his view, the negative factors are now priced in. He highlights the following catalyst, and I quote, strong model cycle and order backlog, the ability to pass on cost through price increases, normalization of the supply chain, and less ADR concerns with the new exchange listings, end of quote. He also points to something I covered in previous videos, and that is, with the severe decline in stock prices we've seen year to date, there has been a re-rating of multiples which helps determine stock valuation. His new price target assumes a valuation of 1.7 times 2023 EV sales estimates, which he calls quote-unquote attractive. Sutra Securities, which I'm probably pronouncing that wrong, also initiated coverage on NEO with a buy rating, though they did not provide a specific price target. That said, part of the reason stems from the expected growth they see ahead for NEO. The expectation being that they reach 1 million annual sales by 2025. For context, 2022 is the first year that Tesla will achieve a run rate of 1 million annual sales, and it took them over 10 years to get here. If NEO lives up to expectations, they will achieve the same milestone in half the time. That's important and something to keep in mind. At this point, it's clear to me that sentiment is shifting. Now we'll have to see if any of these price targets and ratings change post-earning based on the forward guidance. However, current consensus places the average price target at $40.66. That's a 145.35% upside from current level. The SP 500, by contrast, will definitely not come anywhere close to this return on investment. More on what I mean here later in the video. The high end of the projection comes in at $87 a year out, or we could be as low as $26. Either way, notice the lack of a hold and sell rating here. Yeah, that's the point. The reality is, if you pay attention to the fundamentals, I don't see any reasons to not be buying this stock hand over fist, unless of course you just don't have the money to do so. The last item to cover, but certainly not the least, according to a local news channel in China called Yikai, probably again pronouncing that wrong, NEO is presumably in the planning phase for building a US factory. NEO has yet to confirm the factory building rumor. However, what we do know, and I quote, NEO is hiring for positions including overseas manufacturing campus planning specialist, body process specialist for overseas project, overseas planning and infrastructure specialist, and overseas logistic project managers. Job description for the campus planning specialist requires candidates to have been responsible for 2 or more complete master plans projects with at least one in the US. That's important. Candidates for the position all need to be familiar with and understand US state policies, design code and planning submission processes, and be familiar with the US process, planning, and master plan principles, end of quote. This to me does strongly suggest that NEO is moving ahead with preparations for entering the US market. They already have a design studio in California, and the US was highlighted as one of the 25 countries they will be entering by 2025 during the last NEO day. We'll likely have to wait a bit longer to find out if the US launch date is being pulled in. My personal belief is that NEO will launch in the US by or before the 2024 US elections. I can't wait to see if I'm right. The last thing to note on a go-forward basis is this. At the macro level, we already know about the 0.50 percentage point increase for the Fed funds rate coming in June and July. And starting June 1st, so next week, the Fed will start its balance sheet reduction, or what is also known as quantitative tightening. Historically, the stock market, represented by the SP 500, does extremely well during quantitative easing periods. We've had 4 to date in recent years, highlighted as QE1, QE2, 3, and QE4, which we've just wrapped up. However, in periods of quantitative tightening, the stock market historically always goes down initially and has less outlandish returns. My sole purpose in telling you this is there are going to be more red days ahead, and for that reason, I will not be rushing into positions, whether it be NEO or anything else, but rather taking advantage of the market volatility that is still to come and focus on accumulating primarily on red days. Unless something in the economy breaks, this is the trajectory that we're on, and the Fed won't be reassessing the pace of its policies until the September meeting. With all that in mind, even if NEO only manages to hit $26 a year out from now, that still represents a 61% return on investment. Investing into the SP 500 with a broad market ETF strategy will not come anywhere near close to that number. So that is some perspective for you. And on that note, I'll leave it here for today. Don't forget to drop this video a like if it helped you gain a new perspective, and share with others who you think could also benefit from it. For my newcomers, subscribe and don't forget to ring the notification bell so that you too can stay in the know. As a reminder, I post every Sunday, and if you are in the US, don't forget that the market is closed on Monday in observance of Memorial Day. Enjoy the long weekend. Thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.